start with you. We talk about this market. The question for our earlier guests is along the lines, quite simply, of what's next. So what is next? What's the next big thing that you're looking at?
Okay, well, first of all, we can hit 20,000 in just one decent good day. I don't think the game's over right now. But here's the thing. We've had this big small cap run up. We've had this run up in construction and banking. You know, I get that. But what we need to know right now is what are going to be the other less obvious things that investors are going to start glom onto. Because we're going to be in a pro-business, low-tax environment going forward next year. So why not look at some easy names? Because the profits in small cap value, it's already happened. So we're looking at things like Costco, Starbucks. That's places where you get these marginal dollars. You know, Starbucks, it's like the world's largest drug dealer of caffeine. Kevin Johnson, great CEO, New Mexico, Aggies, alumni, go Aggies, a little plug for New Mexico. But this is a stock that, you know, it's big, but when you can get it on a discount because people are freaked out about the CEO, Howard Schultz, changing, it lets you get something large that is always never going to be a value, but you can get in there and buy it. And it hasn't taken advantage of this big rally. Starbucks, same things. There's Costco. Because when you think about it, a business spender that has lower taxes and is going to have less regulation, they're going to be looser with that money. And they're going to buy that extra Starbucks each week, and they're going to buy some extra junk for the office at Costco. So think about big, obvious names. If you want to mess around with small cap, buy an index and call it a year.
Yeah, I mean, the Russell 2000 has been ripping it up since the election, but well thought out there with Costco and Starbucks. You saw some of Lee's picks as we were showing them on the screen. I'm going to tell you, Mark does not look very impressed with those picks, but his hat is really, well, that's not, is that like a, I don't think that's a Santa hat. To me, that's more of an elf. Oh, I see. Elf. Yeah, it's an elf hat, right? All right. So
absolutely.
Nothing gets by me, Mark. Trust me on that one. Now, your focus, and it's going to be hard for us to take you seriously. You might have to cover up your face when you get serious with some stock charts or something like that with that hat. But your focus is more global, right? I mean, yeah, and what a day to be focused because there's so much geopolitical news. But give us kind of your lowdown on 2017 and what you're honing in on.
Well, I think it's hard, you know, and this hat is in honor of all the analyst elves at Intrepid Capital turning over rocks all year to generate attractive, you know, mid-teens return for calendar year 16 in the Intrepid Capital Fund. But I think that we've pulled forward the returns for 17. I mean, as Lee mentioned, the Russell 2000's rocketed since November 8th. I think it's up 16%. It's very hard, in my mind, and from our perspective in trying to find a private market value discount to find many in the U.S. They're odds and ends, but they're not abundantly, you know, they're not abundant discounts from our perspective.
Can I, Mark, can I just stop you for a second because we're showing some of your individual stock picks. So I'd just like you to talk about them a little bit, the likes of Western Digital and Dynastar's up there, DDC, and what you like about those stocks, just so we could add some perspective to what we have on our screen right now. Tell us about those.
Well, Western Digital is a bigger market cap. We own SanDisk, so they've merged, and they're rationalizing, you know, their head count, and their free cash flow generation is going to go up. They've given guidance from 185 to 215, and their synergies, as they call it, in reducing head count is happening quicker than maybe the street expected. So those shares are at 70, and we think they're worth in the mid-80s. Dominion Diamond, you know, I'd hate to do due diligence in Yellowknife, Northwest Territories right now in Canada, but it's a discount to book, and there's an attractive dividend of north of 4%. It's been dinged a little bit because of anticipation that maybe China's going to slow down, India's going to slow down, but, you know, this time of year, guys, diamonds are a girl's best friend, so let's hope.
That's true. Let's hope from our perspective as well.